Well guys, in today's featured presentation, we're going to cover two things. Well, the first is we're going to talk about what easy money stock I just bought. I just put $10,000 into a stock that I feel like is easy money over the next few years, okay? The second thing we'll talk about, which is actually much more important, why is this stock easy money? Why am I likely going to get a very nice ROI on this stock over the next few years? It's such an easy money stock, okay? Now, what is an easy money stock? First off, I rarely ever call a stock an easy money stock. I talk about stocks all the time on the channel. Stocks I like, stocks I don't like, stocks I'm like, I talk about stocks all the time. And you very rarely ever hear me call a stock an easy money stock. And it's because there's not that few, okay? What is an easy money stock? An easy money stock is a stock that has near a 0% chance of going down if you hold that stock for a 5-year span. In this stock, I believe it's definitely less than a 1% chance that if I'm in this stock over the next 5 years, that I lose money on the stock, that I'm like down on. So whatever price I bought out today, likely the price is going to be, quite a bit higher than wherever I bought it at here today over the next 5 years, okay? And it's also a stock that has a high probability, very high probability of being up 50% plus in 5 years from now. These are the two biggest things that make up an easy money stock. And let's put it this way. I've been making, videos like crazy for the last 4+ years on YouTube. And there have only been 2 stocks ever, okay, that have gotten this title of quote unquote an easy money stock. Think about that. How many stocks I've talked about, how many stocks I've been bullish on, and only 2 stocks ever I called easy money stocks. The first one being Apple, okay? Apple, back when it was $100-something, that was the first stock I ever coined the term easy money stock over the coming years. Now, that video, the stock was $100-something. Here today, Apple stock's $382 a share. So needless to say, yeah, Apple was easy money. There was a very low probability you lost money in that one, and a very high probability it was going to go up 50% plus. And it even went up a lot more than I even expected that stock to go up, okay? The second stock, the only other stock I've called other than this stock we're doing a video about here today, an Apple stock, an easy money stock, is the FB, okay? FB absolutely was an easy money stock. And I told you guys, it's just, one of those stocks that very low probability you lose money on this one over the coming years, and very high probability I make 50% plus on my money over the coming years, okay? And look at this stock. It is treating us pretty dang well, okay? Just in the public account alone, in that position, we are up over $33,000 as of yet, and that one's gonna keep climbing over the next 5 years, in my opinion, okay? So that's the only other easy money stock. Even Tesla, I never called Tesla easy money stock. As much as I've been bullish on it and doing videos about how I believe it's going to be XX price, I've never ever once ever called Tesla an easy money stock. Even though I thought it had potential huge upside, you never knew what could happen with Tesla, especially back when I was investing in it and things were a lot less clear. It was possible things could have went south and maybe, I lost money in that stock or something. So I never called that stock an easy money stock. By the way, that video is a classic right there. Tesla stock to $3,000. I'm going to tell you the craziest story you'll ever hear in the history of YouTube, okay? Literally, I released that video. It's very shortly after I got super bullish on Tesla. I released that video called Tesla stock going to 3,000. Keep in mind, Tesla stock back then was like, I don't know, $200-something a share. So it sounded ridiculous as it was to anybody at that time, okay? I released it at 1:30 a.m., okay? The next day, Tesla stock goes down 14%, okay? Some crazy news comes out around Elon Musk, the SEC, something at that time. Stock goes down 14%, literally within 24 hours of me putting out this super bullish Tesla video, and I got absolutely obliterated in the comment section. People, that was one of the videos I've ever done, probably top 3 video ever, where I got crazy amounts of hate. I'm not even going to read you these comments because I'd probably get demonetized if I read you off these comments. And this is just a small fraction of them. People were just going at me saying I'm the dumbest person in the world for ever believing in Tesla. Look at it, it went down 14% here today. You're losing, the screenshots show it all, okay? And needless to say, we're doing all right on Tesla. I'm not sure who was right in that whole situation, but Yeah, we're doing okay. Make sure you guys smash the thumbs up on this video for the stuff I have to put up with here on YouTube. Like releasing a video goes down and then people say I'm an idiot, and then it goes up 500%, and those people are never to be found again, okay? And I just want to also say thank you to all the believers and the fans of this channel and me in general and the content I put out, because you guys are the reason that, you know, the channel's as big as it is. I mean, over 500,000 subscribers now, and the second channel, you know, as big as that channel is. I just want to say thank you to you guys for always believing in the channel and being fans of it, because, you know, those people, they left so much negativity at that time and threw so much dirt on me, you know, that next day when Tesla went down huge, and, you know, it is what it is. So thank you guys, okay? So this stock here today we're talking about that I put over $10,000 in, actually $10,713 in. I bought 60 shares of this stock. I paid $178.55 for this stock here today. Do you want to know what it is? It is a Berkshire Hathaway. Yes, Berkshire Hathaway is a lucky stock to be the third stock ever in the history of this channel to be called an easy money stock, and that's exactly what it is. And I want to explain to you why now, okay? So Berkshire Hathaway, I just added some more shares. So I bought this one a little bit in the past, bought some more here today, obviously. Cost basis right now, $177.29. I really hope it goes down short term, because I would love to build this into a really, really large position across my different accounts, okay? But why is this such an easy money stock over the next 5 years? Why am I so confident that the chances this stock I lose money in over the next 5 years are so low, and the chances I make 50% plus over the next 5 years? Why do I feel those odds are so high? Well, let's start out here, okay? So the market capitalization on Berkshire Hathaway right now is $434 billion. That is essentially means the cost if you were buying the entire company, everything they do, their cash, everything, okay? It costs you $434 billion. And I want you to keep that number in the back of your mind, because it's going to be very important as we go through this, okay? What we're going to go through are the 4 pillars of my bull case around Berkshire Hathaway and why this is such an easy money stock, okay? Pillar number 1 has to do with the fact that Berkshire Hathaway owns 100% stakes in a ton of different companies. Berkshire Hathaway isn't just like one company in the sense of you would think about a company like Microsoft and it's just like Microsoft's products or something like that. No, Berkshire owns a ton of different subsidiaries, okay? This is just a small amount of the amount of subsidiaries that Berkshire Hathaway owns, okay? They own Geico, which is their real cash flow machine insurance business, okay? They own Dairy Queen. They own Duracell batteries. They own Burlington Northern Santa Fe Railroad, one of the biggest rail car companies in all of the world, and especially in the United States of America. Another company that's just a cash flow machine, okay? They own Fruit of the Loom, See's Candies. Ooh, you gotta love some See's Candies once in a while, right? Benjamin Moore Paints, Lubrizol, one of the biggest lubricant companies in all of the world, Lubrizol, okay? Heinz, Kraft Heinz, you guys probably know Kraft Heinz, right? McLean, along with a ton of other companies that are all valued in the hundreds of millions or potentially billions or tens of billions of dollars, okay? And what do all these companies do? They throw off cash flow left and right, okay? All these businesses, for the most part, are very stable, and almost all of these subsidiaries that Berkshire Hathaway owns are usually very profitable businesses. Now, with everything going on with Rona, obviously cash flows can get hit in the short term for any of these business models. This is just something we know for pretty much just about any company out there right now. But the fact is, we will get to more normal levels over time, and the cash flow machines that are these subsidiaries will get back up and running. And here's the exciting part about all that cash flow. You think about, they own these businesses like Geico and Burlington Northern Santa Fe and Lubrizol and all these massive companies that throw off, you know, billions upon billions upon billions of dollars of cash flow back to Berkshire Hathaway. They can essentially use that money to buy more businesses. Like Berkshire Hathaway doesn't pay dividends, and they do have a share buyback on, but they don't buy that many shares back. So usually what they do, they put that money on their balance sheet in cash, and then they go buy 100% stakes in more businesses. They'll just buy out a company, just like, hey, you know, Buffett will see a great deal. You know, somebody will contact him. Hey, we're thinking about selling this business, $2 billion. Would you like to buy it? You know what? Not $2 billion, but I'll give you 1.7. Okay, deal. Sold to Buffett for 1.7. That's what Warren Buffett loves to to do. That's what he's done successfully his entire career and how he built the business. And so you just buy more and more businesses, or you invest in other businesses where maybe you aren't buying 100% ownership in, but you're buying a good chunk of that business, okay? A deal that's a perfect example is, look at this deal they just did, very recently, like a few days ago with Dominion, where they bought a ton of natural gas assets from Dominion, right? Now, there are definitely some folks that looked at this deal and said, Warren Buffett got a great deal. Let's just put it that way, a great deal on those natural gas assets that he ended up buying from Dominion, okay? This is what they go ahead and do, and because of all those cash flows, Buffett can do special deals like this, or he can buy 100% ownership stakes in companies, or just buy, part ownership stakes in companies like Apple, like they've done at Berkshire Hathaway. It's a beautiful, beautiful thing, okay? That's pillar number one. They're 100% owned subsidiaries. Pillar number 2 of 4, why I'm so excited about this stock and why it's an easy money stock, is you got the GOAT, okay? Warren Buffett, one of the best investors ever, one of the best businessmen ever. He's still at the company and he's still running. Guy's about to turn 90, I think, in August, right? And I gotta say, I've watched, interviews with him in the past year or two. The guy still is, quick, and he's still putting together deals like this Dominion deal. It's amazing, okay? It's simply amazing. The guy is still the head of the company, doing a great job. He runs one of the biggest companies literally in all of the world and doing a phenomenal job, and he's still at the helm. But mostly, like, we just have to understand, if you're buying the stock, eventually Buffett's going to leave, right? Buffett's going to retire at some point in time. I mean, maybe it's next year, maybe it's 3 years from now, maybe it's 5 years from now, but sometime likely within the next 5 years, Buffett is likely going to step down from the company. But I think he's instilling a great culture into the company, into the managers and executives at this company. Two big things that Buffett, two big Buffett principles. One is always focusing on the long term. What is this asset we're buying? What's it going to likely produce over the next 5, 10, 15 years? Always focus on long term. And number 2, Warren Buffett's going to instill in that culture to get great deals. He's teaching these guys that are going to take over the company for the long, long run how to get these great deals, how to, negotiate, how to look for the next opportunity where you can 2x, 3x your money if you put, and Buffett's done a ton of these special deals over time where he's been able to make, 50%, 100%, 200% ROIs on money that was invested in different things. He did a deal with Bank of America, I remember many, many years ago, and made out like a bandit on that, okay? Those are the two biggest things he's going to just have instilled in the culture. And this is something great CEOs can really do, something Steve Jobs did very successfully, okay? Steve Jobs really got the culture right at Apple before, unfortunately, he passed on. And because he did that, the company's been able to thrive over the last decade. So even after Steve Jobs went away from the company and unfortunately passed on, the company's been able to well over double up its business since then, well over double up, and been able to grow into, right around the biggest company in the world, all because Steve Jobs instilled a specific culture in that company that, fortunately enough, was, has continued on there, okay? Pillar number 3 of 4, and why this is an easy money stock, is that cash pile, okay? As of the most recent quarter, Berkshire Hathaway had $137 billion in cash just sitting around, okay? This is pillar number 3 of 4, why I'm so excited about this stock. In my estimation, this company, Berkshire Hathaway, is going to have between $140 billion and $150 billion in cash by Q1 of 2021. Okay? I'm not sure why it looks like Q1 of 2020, but it's supposed to be Q1 of 2021. So $140 to $150 billion in cash by Q1 of 2021. That's amazing, guys. I mean, just think about that number. That's just, an unbelievable number. Basically, they're in a prime position to, take advantage of deals, right? They just did the Dominion deal, which was a deal that was several $billion, but they're ready for any deals out there. If we get any type of major dip in the stock market again, or let's say stock market has weakness over the next year, they can take advantage of that. Let's say, there's a lot of businesses right now that are cutting it really close and maybe going to go under. Hey, guess what? Warren Buffett can be there to potentially buy you out, do a deal for some equity, things like that. They have so much cash. They are in prime position for any company that's in trouble to basically take advantage and get a good deal and help that company through times like that. I absolutely love a company that is primed with crazy amounts of cash. And the fact is, Berkshire Hathaway has a about as much, if not more cash than just about any company in the entire world. And so that I definitely love about that. And then you think about, Warren Buffett's biggest investment. Warren Buffett's biggest investment is Apple stock, right? Who holds the most cash of any public company in the world? Apple. Isn't that incredible? Berkshire Hathaway, one of the top 3 or 5 companies in the world in terms of holding cash, and their biggest investment is the #1 company at holding cash. Talk about 2 companies that are primed and ready to take advantage of any deals, and just give you that when we talk about things like, the odds it goes down over the next 5 years extremely low, that lets somebody like myself sleep really well at night, just understanding they got crazy cash around, okay? Now, on to pillar number 4 of 4, okay? And this is one I just love, okay? Let's say this is just the cherry on top. I mean, if it wasn't, I could already make an argument that just based upon the cash pile and the 100% owned businesses that Berkshire has, I could already kind of make an argument that, Berkshire Hathaway is actually a decently valued stock here, okay? But this last one, number 4, is the cherry on top. This is what puts it overboard for me, and this what it makes me very confident that I'd be able to get a 50% plus ROI on the stock over the next 5 years, okay? Look at its investment load. We're talking Berkshire Hathaway now has $216 billion in investments as of today, okay? Look at those massive positions. $96 billion is their investment position in Apple Corporation, $21 billion in Bank of America, $17 billion in Coca-Cola, American Express, $13 billion stake, Kraft Heinz, $10 billion stake, Wells Fargo, $8 billion stake, Moody's, $7 billion stake, JP Morgan Chase, $5 billion stake, and just look at how many massive positions they have at this company, okay? $216 billion is the total amount they have invested right now. So if they sold all those stocks, they get 216 more billion in cash they could basically have in the balance sheet, which would, take it up to what, 350 billion or some just silly number, right? 19 stocks they have over $1 billion in. Think about that for a moment. Berkshire Hathaway's portfolio, over 19 stocks. I mean, just imagine having one stock with $1 billion in it. 19 different stocks with over $1 billion stakes in, okay? 5 stocks that they have over $10 billion with. That's crazy numbers, okay? They have almost $100 billion stake now in Apple Corporation, and they receive billions of dollars in dividends. Something you might have missed when you looked at that portfolio is, guess what? The majority of those stocks, they pay out dividend money, very nice dividend money. A lot of those stocks yield 2%, 3%, 4%, 5%, some even 6% dividend yields. And so Berkshire Hathaway every single year receives billions upon billions upon billions of dollars in dividends. And think about this for a moment, okay? Those billions of dollars in dividends the company receives each and every year, one, they're taxed at much less of a rate than if you were to take short-term gains or something like that. 2 is they can put this money into just sitting on cash in the balance sheet just to, wait for some great deals, or they can buy more stocks with it, right? They buy more and more stocks and more ownership in different companies, and guess what? They get paid out even more dividends, which allows them to buy even more stocks, right? They can 100% buy out different corporations, right? Let's say Berkshire Hathaway is going to receive, let's say $5 billion in dividends next year, for instance, okay? That $5 billion, they can just go ahead and buy a company straight up, like 100% of it for $5 billion and still be able to keep a massive cash load on the balance sheet. And then they can also, when those billions of dollars in dividends come in each year, Buffett can take advantage of special deals, kind of like that Dominion deal they just did for those natural gas assets, okay, which Buffett loves to do those special type of deals. And so when you add up all this and you look at the market cap of, a little over 430 billion, you can begin to start understanding that this business is this stock is absolutely easy money over the next 5 years. Yes, the business is being hurt right now because of Rona. That will pass. We will move on. And guess what? Berkshire Hathaway will continue to thrive into the future, and the probability of this company is a $600 billion or $800 billion market capitalization in 5 years from now, I would say very, very, very high, okay? And the chances this market cap is $200 billion or $300 billion in 5 years from now, I would say extremely low. I don't even want to know the market cap of all the other companies out there if Berkshire Hathaway is at 200 or 300 billion in 5 years from now. And so congratulations to the mentor I've never met in real life, Warren Buffett, okay? You and your company have been only the third stock ever in the history of my YouTube channel to get an easy money stock. So why don't you go buy yourself a nice little cheeseburger tonight at McDonald's, you know, Mr. Buffett. I know you love some Mickey D's. Hope you guys enjoyed today's video. As always, let me know what you think about this stock in the comment section. Would you put this in the category of a stocks to buy type stock, or are you thinking just like a stock to watch? I would love to hear from you guys in that comment section. As always, make sure you smash the thumbs up button. Thank you for watching. Oh, one more thing real quick. First link in that description is to an exclusive video I put together for you guys that basically takes you in how to create a low risk, high reward stock market portfolio. So if you want to check out that video, definitely check that out. It's an exclusive video, first link in the description. I think you'll really enjoy that one. Thank you for watching and have a great day.